The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits. Hello and welcome to Late Night Macro Monday Prep. Gonna take a look at bonds. The dark and weird stuff. Gotta look at the big picture, man. The CTAs, what is that? I don't know, you might find out in this episode. TLT, remember that? Bonds, market makers, covering shorts. Oh man, did you know they even have to do that on stuff like, I don't know, stuff like bonds? What if they get stuck in bonds and they're shorting bonds? Did you know that big banks, market makers, they actually take leverage when they short stuff? They do leverage definitely going up, but did you know they even will take out loans, leverage to short stuff? What if they get caught? That's where they usually get caught. That's where they usually get caught. I found, I put this big, huge burrito here for you, wrapped all TLT, which is the bonds, 20-year treasury. I'd say, as far as I know, it's probably the heaviest volume bond out there to trade. That's why I focus on it. There's other ones, of course, you can get like 10-year stuff and some other ones, but TLT is the bread and butter. So we're going to focus on that. What is a burrito showing us? We're right in the middle of the burrito. Boring, right? So we could either go up or down, right? Not only that, we are sitting at a head and shoulders. That's why I put in the Mr. Octopus here. You have the shoulder, one, the head. Then you have the other shoulder that curled right up on over this white line that we drew here. The possible variation that's going to happen is it's going to follow the white and go bull, or it's going to follow the purple and go back down, I think, to probably just this bottom line down here, which is going to be like 135. But here's the deal. Once this does break, it's going to break hard. I think we're going to be heading to the all-time highs again, which is going to put us up back over 178. Can you imagine having some calls and riding that from like 146 to 178 or even to 160? You're printing, dude. You're going to be printing hard. Look at the volume, though. Always pay attention to this volume curl, okay? We knew this. We called this one out, when was this? I don't know, 4 months ago or something like that, right? When we had this huge red volume stick. When you see that, that usually means bears are out of honey and they're going back into hibernation. So the reds are done. They gave out all the juice they can. They got to go hibernate for a couple months. What does that mean? After you see these big red candles, stuff usually goes up. And guess what happened? The largest volume red we've had in a decade, of course the stock went up. But not only that, look at the volume past it. Even the green volume, you see this cup kind of just curling up like that. More volume usually equals bull runs. So keep that in mind too, especially after you see a big red. If you see green, big volume coming in, it's usually time to buy. This is kind of interesting here. So this is the SPX, like the big SPY, right? The big SPY that's not condensed. It's got a little less volume than SPY itself, less SPX. All right, we're looking at that. Look at the divergence here. Did you know that these things usually run? They usually try to run together like in here, like we did in was it 2013 all the way through 2017? They basically ran exactly together with the SPY, the biggest companies, right? Well, we've kind of had this divergence for the 3-year cycle again. And then what happened? They touched each other in March perfectly. What happened after that? They diverged. They went opposite. But look at where SPX is at now. It's absolutely in outer space. So I've said 1,000 times, what happens when stuff that usually rips together, diverge, goes opposite? The alligator likes to bite down eventually, right? Mouth is wide open, boom, you're gonna get that snap effect, like a rubber band that you pull, pop, okay? Something's gonna happen. I don't think the SPY and all that are ready to crash down yet. Everything is showing me that the big macro picture of a lot of the futures is chilling. They're just gonna kind of keep going up. All the big boys keep buying more and more and more. Why not? If it's working for them, if they can get continued 5%-ish a month, why not? Wouldn't you? But just look at this. The biggest divergence that we've had was, I don't know, was this about 2 years ago, right? It was about 30% divergence. So remember, the orange here is the SPX, and it was a 33.1% divergence. The farthest they've ever been away. Remember, they slapped together. So what I did is I went and measured the difference now from back then, right? It's absolutely huge, way bigger than 30. Is it double? It looked about double to me. So what did I do? You can actually draw in, I drew in this yellow line here, vertical line, and I took it from the very top to the very bottom of where this was here on TLT. And then what I did is I moved it over here to exactly where we're at now. And then I copied and pasted it. So now we have 2. And guess what, dude? When you stack 2 of our largest old divergence records from 2 years ago on top of each other, we are exactly, like almost exactly 2x times the divergence we've ever had, ever, in all the history of TLT and SPX. We are 2x what we were 2 years ago, which was the record breaker. That is huge. Something has got to give. Either the TLT is going up to catch back up, is going to just rip faces and get all-time highs, or SPX is going to come back down, or they're going to do this. TLT is going to go up, SPX is going to go down. I think SPX is probably going to get some breathers towards the end of the year. But TLT, it needs to close that gap. That's absolutely nuts. We're seeing around 1.5 to 3% bull flags after bull flag lasting about every 2 weeks recently on TLT. Okay, so that's what we're showing here. We're zoomed out, but now we're zooming in. We're talking about these little rips that we've had since February. Because remember, when people actually get scared, they run to bonds, they run to TLT. So when all the small cap stuff was tanking, all the tech stuff was tanking in February, SPACs and all that, TLT started going up. Remember my old hedging video from like a year ago? This is what happens. So anyway, we've had these like 1 to 3% rips of bull flags. So what happened at the end of last week? Well, we mooned like up till Wednesday here. You can see we're at the top of this volume channel that already had drawn in here, up to about like 149 on TLT. Well, if we're going to go down another 1.5 to 3% and create another bull flag, like a 45-degree angle down here, and then get ready for the next leg up, that's going to put us around $144 to $146. So we're kind of at a critical point right there, okay? We want to break out, but we're sitting right on that broad shoulder line too. So we need to break out of that shoulder line. I personally don't want to go big or do much with this until we get a confirmation and try to come back down onto the shoulder of Mr. Octopus here, right? Right at like, where is that? About 150 bucks. I want it to go above 150, come back down, smack 150, come back up, come back down, smack 150 again and get rejected. If it rejects twice above 150, that's where you're going to see this white line start happening, where we're going to start shooting all-time highs, and I think we're going to just skip up because this is absolutely ridiculous. 2x away where it usually kind of tries to run together. You know, they'll pull away a little bit like back in here, but nothing like this. Nothing like that. So, bring up the RSI. Check this out. The RSI paints a different picture. Maybe we just stay in this blue-green trend zone, which we totally could, because we've got a lot of volume, a lot of people that have bought and sold and are trying to kind of keep it in this buy-sell zone here. Where is that? 138 all the way up to 150. That shoulder zone we're talking about here, okay? So we could come back down and go all the way back down to even like 135. I don't really see that. I think if anything, we'll probably come back down to maybe like 140 in the middle. But just watch this. Help me watch this too, because I'm always trying to do stuff. Let me know if you see this trying to hit 140. If we hit back down to 140, I might look at taking some positions, not calls at that moment. But at that point, I'll probably just get some sleeper shares, start dripping them in and watching it, and maybe, 135, I might be loading up. That, or we break it. I'm gonna play this very conservatively and wait till we totally clear the head and shoulders, like I said. So right here, we need to get I put in this gold line at 150. Watch that, that'll break that whole shoulder line. So if you wanna get crazy on this, maybe print some checks, pay your bills off, retire or something, you can do 3x leverage of TLT. Isn't that rad? It's called TMF, ticker TMF, directional 20-year treasury bull share 3xer. I paired this up with and put the orange on it. Orange again is the SPX, the SPY, the big boy SPY that goes to 5,000. Look at that divergence, dude. It's absolutely crazy. Those jaws need to snap, dude. This TLT is probably going to come up, and then I think SPY's going to eventually meet it. Maybe at 200% up on our money or something, or more. Because remember, this is 3x. So if TLT goes up 10%, this is going to go up 30%. Keep that in mind. How about this? We can even short it. TBT, you heard of that? Well, TBT got rejected. The ProShares Ultra Short Lehman 20-year bond. So you're shorting the bonds. This thing got rejected hard. If you see, we kind of got a cup and handle here. So you can put this in, you turn the cup sideways and you got the handle of the cup over here, right? So you have this line here. It's been smacked around 2-3 times here. This line here in the middle, 2-3 times smack that, reject, reject, rejected, reject, reject 4 times here. Finally blasted up it, but dude, you see this long hammer here? Hammer. This long hammer, I'm telling you, got rejected hard, like, we ain't going that low. So this is kind of telling us that we are going to go a little bit lower on TLT, like I said. Like we might go down to like the 144, 140 range again, and then come our next rocket up. So you can watch this TBT, because it goes the opposite of those, and sometimes get a more clear picture. I think this one paints pretty darn well. So totally watch that. You know what's funny though? Even look at the volume. You can even see the cup and handle in the volume. Isn't that crazy? Big old cup and handle. What do you think? What do you think? Did you know that DXY, what is DXY? Ticker DXY is the United States dollar. United States dollar currency usually follows bonds. Did you know that? Did you know you can chart the US dollar from 1986? I think that's interesting. Am I just dorking out? I think it's pretty rad. Where are we at in the all-time dollar value? Remember, this is compared and clutched to all the other dollars in the world. This isn't just saying what is the US dollar worth, including all inflation, deflation, and printing of money, right? It's not. It's versus other currencies, let's call them fiat currencies at that. It's not based on gold or anything like that. It's just whatever they're making up. Otherwise, this chart would be like this. Okay? Just always tanking like crazy. Did you know in the deflation zone, like the deflation charts of your money, like, how much your dollar's worth or not worth now? Did you know that house prices and rent prices are not included in that? Do you think they should be? Why do you think they're not in there is the bigger question. Is it maybe to hide it from the people who don't know that? I don't know. What do you think? Anyways, where are we at for VWAP for DXY for the dollar? I think we're pretty much right in the middle. We're literally like lightning bolted right in the middle here on this big red line. We're trying to hold here. And this is super macro. Again, we're charting here from 1986. That tells you something. We've been rejected, and we have a little pattern in here that's going from like $90 up to 92. We've been in that for way too long. Way too long, dude. It's trying to break. This is ready to break. It wants to break. Guess where it's at? Guess what the chart looks like? Can you guess? I just told you, bub. It's going to look exactly like TLT. It's kind of got a head and shoulder thing going on. All right, sitting at the kind of the top of it. It could come back down into this colored horizontal lines I was showing you above. It's kind of the same thing. They're both following each other. I've also got these two weird triangle bands that I put in here. It can use these. You know, it can use these. There's also ones on TLT that you put in. I didn't even get time to put that up, but essentially we could get that little micro bounce that we got on Friday where things went bear, where they went down a little bit. We could get that and then just bounce right off its horizontal, you know, maybe go down like another 0.5% on Monday. Dude, and then come Tuesday, it can just rip faces and go to all-time highs again. Wouldn't it be nice to be in this, though? At least in it a little bit? Dude, did you know that the options contracts, OCC, are at crazy records right now? What does that mean? Like, more people are buying options than ever before by far. June 2021, total volume up 25.6% from a year ago. You thought people were YOLOing last summer? People are YOLOing now. Why do you think big banks are still trying to short? Why do you think they're still trying to short? Why do you think they're getting lost in those shorts, though, too? Remember that. So I totally forgot to put it in here, but basically there's some big banks out there that are kind of running into that, oh no, we need to cover our shorts that we have in TLT. How do they do that? They actually had to rebuy. They have to buy calls. They have to buy shares, right? To cover their shorts, which are actually losing right now because we've had this rip. To the tune of, I think it's like $98 billion, dude. And that's just like one house bank I was looking at. I think another one was maybe like 76 billion or something like that. And how they do them is they start dripping these buys in. They're still not at the, they have like different levels of buy where they're gonna just use like house money, or they're gonna get leveraged money, or like super leveraged or something like that, where they do like option calls and then they like borrow to get option calls. Did you know banks even do that? Where does that money come from? Can someone answer that question? Regardless, though, think about that. They've got to now cover their shorts on this. If they're going to be putting in those money and dripping that in here, they try to do it with their house money. They don't like doing the plus stuff where they got to take out loans and get leverage to cover the shorts. But they have to. I think it starts next week. So we're going to get a lot of that. Banks trying to cover themselves. What do you think is going to happen? Here's the chart. This is showing 2021 for the options contract, back to that, where in the key lime pie color here, key lime pie, this is this year. Last year is the turquoise. You see this? This year we're at $5 billion in contracts, dude. Last year we were only at like 3.5 billion. Think about how crazy that is. Look at this, though. We need to pay attention to SPY. This is baby SPY. Looks fine. Just watch two gold circles. Two gold circles I put in here. This lower one here, we still have this gap right at $400, which I knew that we would have. I knew when we got above 400, we were gonna just blast on top of it. That's what happened. We blast so hard. On the weekly, we've got a gap, a huge gap. You see that? This is crazy. So when we do finally get the correction from SPY, 400 still might be it to refill that gap. People see it. If we can see it, the big boys see it for sure. We also have a lot of VWAP, a lot of buys and sells going on, a lot of money spent around the 416. Again, the big market makers, they literally just have it on auto buy for flow on futures right now. That's why you see these perfect little channels that are just going up. Remember I said, you know, most futures were sitting totally fine. Whenever we have like a big red day, it's only down like a 1.5%, but you just look at the chart. It's right in the middle of this burrito. But just pay attention to the lines, you know what to look for. It's no big deal. It's no big deal right now. Also pay attention to this. So this is IWM. IWM we've talked about is 2000 of the Russell. So you got small cap tech. So like smaller tech companies. By the way, which usually try to lead bigger tech. Keep that in mind. So in this chart here, I actually brought up QQQ. Q is like, just think of it like the big broad tech, bigger, right? It's going to include all the big boys in there too, not just the small bros in the IWM. So turquoise is QQQ, including all the big boys. And this other red and green is IWM, just the small bros. Look at the divergence here. Look at that divergence. Remember we're talking about above, the claws? Remember I talked about since February, people went to safe havens, quote unquote, by going into futures, but they also went into big tech stuff. Big, like, you know, Amazon, Google, stuff like that. What's safer than that? I think it's safer for Coca-Cola. I think Amazon is, don't you think? I'd rather invest in Amazon than Coca-Cola, wouldn't you? But look at this divergence here. This doesn't lie. Also, what's interesting is, again, that you can kind of future tell by just looking at these charts. Follow the small cap. What does this mean? I think that big cap is ready for a kind of a drip down. You know, I think when SPACs were getting cool, when was it, like last November? The market started like doing some weird stuff going down, and a lot of big tech started going down. And the macro picture on the news was stock market's doing terrible, yada yada. But dude, SPACs were flying. You remember that? It was like after October, like November, December, SPACs were zipping. And we're like, yeah, the market's red. We don't care because we're green, right? Who cares? I was back here when we were zipping, and now we've just been consolidating. So I think definitely the big cap stuff, it needs to breathe a little bit. Even if it doesn't, though, this gap here has to start closing, dude. So I think small cap stuff has got to start going up, but I also think the big macro, big tech stuff is going to start going down a little bit. It's not hard to tell that, you know, most of the money is actually made in the small cap stuff. That's where you multiply. It's a lot harder to multiply in Amazon than it is in the smaller bro stuff, right? Taking a look here, let's actually share. A lot of this, by the way, was shared on our Discord, so thanks for everyone who shared any of it. This is small cap gonna rip bull, or big cap's gonna go bear, or both. Remember, I think it's a little bit of both. This is actually from Yardini Research, so thank you, Yardini Research. This is showing PE ratios for S&P 500 index large caps. Showing the average PE is at 21.5. If you zoom out though, I mean, dude, this is back from 2000. In 2000, there was a huge tech crash. That's what 2000 was known for, like the big tech crash, man. Everyone was like Microsoft, and I was just starting. And anyways, big crash in big tech. Look at the line. You draw it straight across. We're literally right when the crash happened in 2000, 2001. Pay attention to that. See the March here? This big March dip? We just zipped up. But again, this consolidating. I think it needs to breathe a little. Here's mid cap though. Mid cap's still been a little high. See this? Look at the charts. But look at small cap. You know, small cap, we were ripping. Remember? We had the March, and then it just ripped right up. And this last rally, we're talking November, December of last year to February of this year, and it all tanked. But now it's sitting right at like the VWAP. Right at the VWAP. Average PE, 17.8. So this could actually go a little bit higher. I don't know. Average of the large cap looks like it needs to breathe a little bit. Large cap could just stay the same, but I just feel like small cap needs to catch up. Moving on to housing stuff, this should all freak you out a little bit. I hope it does. This is from someone in our Discord too. These are his opinions. He pulled up the nail chart. What's nail? It's like home builders and suppliers ETF. Pretty cool. So I think you got like Lowe's in here, you know, wood, nails, stuff like that. But look at this chart. Anybody could read this chart and be like, gee, when should I buy it? When it looks low? When should I sell? When it looks high? Like it always looks, right? Anyway, here's his opinion on what was happening here. Back in 2016, the seeds of the next housing crisis have already been planted. On May 16th, there was an article. In 2018, the top economic concerns, recession and housing, without a doubt declined. Home sales are consistent with the possibility of a late 2019 to early 2020 recession. St. Louis Federal Reserve economist William Evans said in a report, and guess what happened? Okay, now, then over here in 2020, we actually had a big dip. Some experts included more than 20 economists from the National Association for Business Economics and 50 real estate experts and economics in the survey for Zillow Price predict the next recession is likely to hit in 2020. All the big boys say we're going to have a recession. Guess what happened? It went down, dude. Well, look at us now. 2022, recession, COVID Delta strain, government spending, higher taxes, government shutdown due to COVID Delta, inflation double digits. All my opinions with this chart is predictable. Anybody can read this chart. Remember, you know, there's other stuff like they're getting rid of the forbearance stuff on renters. That's huge. People that were getting the checks stopped getting the free checks. They now have to start making payments, making rent payments. Homeowners, a lot of them haven't got paid in over a year. They're literally just floating these people. Yeah. Everyone's like, oh, the business owners just get free money from the government. No, they don't. Some of them do. Most of them probably not. And they're losing their booty because they held and trust the government. The smart ones, I've been telling you, sold last February or March, right when all this thing started. You can't trust the government to bail you out the rest of your life on anything. Never do it. Never trust anyone but yourself, okay? Never. Pay attention to this chart. How is this not easy to read? Guess what? We know how to short the house market. We have a 3x bear ETF. Ticker on this is DRV. Look at this insane chart. This is one of those ones that, you know, is always like, let's call it devaluing or going lower. Kind of, it does. You know, back in 2008, it was $32,000, and now it's down to $4.84. But look at this volume. Look at this volume that we have had. It just is blasted through the whole chart. More than ever. Like 10x the volume we've ever had. Over 10x the volume in March. Look at that. People were printing money on while others were losing their booty. Which side of the fence do you want to be on, folks? Look at this, though. So here's DRV zoomed into more of a micro picture. You can tell this last rip in March that people had, they went from $20 all the way up to $70. Back before that, they went from 52 all the way up to 76. Surf that a little bit? I think I do. So what have we been doing since last March? Like, we've had a little bit of ups and downs, but it's just we got that 45-degree angle going down. But look, do you see what's happening with the volume? It's picking up. The volume starts picking up like this. I think we're getting a little bit of more of an arrow going on. It's not going down as hard. We're actually kind of lipping up a little bit. It can start straightening out, and then guess what happens? Volume keeps picking up and goes up. $4.61 a share. Look at this beautiful, beautiful stack, though. Now what we did is we took nail up above, which is the betting that the housing market stuff is going to go up. I believe the government's going to save us. They're going to just give everybody trillions and trillions of dollars, 27,000 times, pay everyone's things, and pay for their house payments. We'll just keep lowering interest rates. I don't think they can. Oh yeah, they're negative. Or wait, what? Aren't home mortgage rates lower than ever? What happens when no one can pay that, though? And then the big boys start selling, and then inventory starts increasing. Supply demand. Do you know what that means? You should look it up. Anyways, The turquoise here, we've got nail. DRV, though, is the red and green. Do you see what I see? And this is, bueno, all right? We've got a leading indicator. So guess what? Nail and turquoise, if you look at this, starts going down before DRV starts going up. When you find leading indicators, it's like finding gold. You literally got a crystal ball here. Every single time, this was back in 2017. Look at this. Nail was flying up because housing prices were going up. Everyone's like, yay, housing market's great. But guess what? It peaked and it started coming down. You had like 2.5, 3 weeks. And then guess what happened? DRV started flying. Leading indicator. Look what happened last time in 2020. This was before or at March. This thing just fell to the floor. Nails did. It was a leading indicator, and what followed this? DRV. Because DRV is you're shorting, you're betting that the housing market is trash. It's completely overvalued. No one can actually realistically afford anything they have. Everyone's still way over their head. People are starting to use credit cards more, remember? What's going to happen, folks? Look at this, though. This is so insane. So remember, turquoise, it is tanking right now. But guess what hasn't started going up? DRV has not started going up. So when turquoise goes down, the red greens goes up. They move the opposite. But here's the craziest part. DRV hasn't really started going up. Like I said, we got a little bit of a curl up. Like it's broke this red line here. I drew this red line in here, right? You can see just a little hair. Just went up a little bit, like 5-10% or something. My tail's wagging. Did you make it through this whole video? I know it was a lot to take in. If you didn't understand it, ask me questions, dude. Put them down in the comments. I try to get in there every once in a while and try to answer them if I can. Hit me up on social media or watch it again. Watch it 2 or 3 times, man. I look at charts hours upon hours a day, dude. This doesn't just show up on my desk and say, pitch it, right? This stuff takes time to understand is what I'm getting at. So if this is way over your head, again, just keep researching it, keep asking questions. Eventually you'll wrap yourself and your mind around it and hopefully really start printing money with us. If you want to join the group, just do it. It's a Discord. Yes, it costs money, but I don't think anyone there has not made their money back. Thanks for watching, y'all. We'll see you out there tomorrow. Please friend us on Twitter and StockTwits.